what exactly is a mortgage? A mortgage is what you take out when you go and buy a property. Most of us here in Australia are not going to be able to afford a property outright with cash. So you're going to have a deposit, and typically that deposit is somewhere around 20%. Now you can take that deposit and go to the bank and borrow. So let's say you're buying that same $500,000 property. You will go and use your $100,000 that you saved and then go borrow $400,000. Now the $400,000 is a loan. It's a loan from the bank, and typically the bank will give you a loan to valuation ratio, LVR, a loan to valuation ratio based on the value of your property. So let's say the value of your property is $500,000. The bank's only willing to lend you 80% of that $500,000. That's $400K. Incidentally, you have $100,000 in deposit. The $400K allows you to buy this property, plus you've got to add on some costs like stamp duty, etc. Right? So that $400,000 then is a loan from the bank. The bank gives you a loan. They also give you a mortgage document. That mortgage document is what you sign and that you promise the bank to pay back the loan over a certain amount of period. Now that might be 10 years, that might be 15, might also be 30 years, but that's what you need to sign to give to the bank as a promise that you are going to be giving them back in repayments the money they've lent to you, plus interest, of course, on top. So typically with a mortgage, when the bank lends you $400,000, they want to charge interest. Now the interest they want to charge is basically their reward for lending you the money. Now that interest fluctuates with the market. We're at a high interest rate at the moment, 6.75 towards 7%. Back 3 years ago, we're at 3%, right? So the interest fluctuates depending on how the market is going, and the Reserve Bank actually makes that decision. So it's out of your control what the interest rate is. When you go for a mortgage, a loan with the bank is going to tell you how much they want as a profit or as a reward for lending you that money.